The situation continues to unfold today in China, in the United States, in Europe, and all over the world. The first thing I want to look at is the defaults that are happening in China more and more every single day, it seems. The second thing we need to look at is the unrest. As prices rise, certainly there will be unrest, at least according to one very prominent individual. And the third thing we need to look at is the forbearance. 1 million households currently in forbearance, and that is a very big number. I'll give you the significance of that. And if you stay until the end, I've got some interesting news. Let's go. So, you know Alibaba and what had happened over this year. Well, they apparently have lost $344 billion in the world's biggest wipeout. Market cap fell by $344 billion, basically over a period of 1 year. That all started with Jack Ma. He had a few words to say, and apparently those in control didn't like it. You could see the comparison here, Alibaba at the top, and then we go down the list, including Tencent. Tencent, one of those companies that is very prominent, and also they were dealing with some of the same. And in fact, I was covering that, showing you the Chinese tech stocks and their declines have really been prominent over this last year. They do get into more of those details, of course, but I wanted to stay focused on this. Many people have said that Jack Ma has disappeared, and to some degree he has, except, take a look at this. Alibaba founder Ma spotted in Mallorca in rare trip abroad after China scrutiny. So he was seen, I believe, something like 8 times since his official disappearance. The first time he had popped up, it was a message that was quite interesting to say the least, but the point here is that he's in Mallorca. This is not really a place that you would go to, if you were confined to one area. So maybe they're loosen up on him at this time, okay? China urges Evergrande's Hui to pay debt with his own wealth. I have been covering what's happening with Evergrande, and now they're telling the billionaire, you gotta pay the problems, you got to pay the price. And this is going on all around in China, where basically the government is saying, hey, you rich people, you got to share the wealth. We'll see how that all works out in the end. He's got a $7.8 billion net worth. It was much higher, but as the stocks have been falling, you have seen that decline as well. So I'm not sure what's going to happen, but I do think it's important to see the revelations. I think there was some more data in here, but basically to see the revelations and how this has affected many of these companies, okay? Because these companies like Evergrande have taken a big hit. You can see Evergrande's dollar bonds are still priced at high default likelihood, even though they have come in and made a few changes. Hey, we're going to fix this, we're going to fix that. At this time, the market isn't really being sold on it, okay? So there's a lot in here, and I want to cover more about this because you have to understand what has been going on. It's not Evergrande. It's not that one company. Record China defaults in focus as Modern Land joins the list. Company didn't pay off a $250 million bond that matured on Monday. Fitch downgrades the developer to restricted default. A Chinese developer of real estate projects that use green technologies has become the latest builder to default, adding to the record of offshore bonds from the nation's borrowers. This is important because it tells you it's not just one-off. This is going on, and it is a contagion, a real problem. Payment problems, defaults on Chinese offshore bonds have set an annual record. We're not done yet, okay? We've already exceeded this previous highs, and it continues. We will see where it goes. I will bring you the details, of course, as always. Downgrade spike. Chinese developers again see the most rating cuts in a month. This is now going over 40. I don't know where it's going to end up, but certainly this is not going to be good for many, not just the billionaires. It's going to affect regular people. They do mention in there how many projects are just simply not being worked on. People are worried. Are they going to build it? Oh, don't worry. We're going to make sure you're whole. We'll see. This is just a Wall Street Journal article discussing the fact that Modern Land previously planned to buy back some of its $250 million bond, which carried a 12.85% coupon. That would be nice if it paid out. And push out the maturity date on the rest. It scrapped that plan, saying it continued to experience liquidity problems and had decided the move wouldn't be in the best interest of the company or the stakeholders. Now, many people would say, this is a small company, cynic, small company, all these different companies that are going, not bankrupt necessarily, but kind of heading in that direction. Oh, they're small. But it's not the way it works. It's one domino after another. Now, they may fix this. They may resolve this. I'm not saying that they won't. What I'm saying here is that we need to highlight where the problems are and then watch our exposure. We'll talk more about that in the Money GPS Insights. But look, this is directly from Fitch. If you are new to the channel, understand that I always bring you the information directly from the source itself or as close as possible. In this case here, directly from Fitch. Fitch downgrades Modern Land to restricted default after missed payment. This is just showing you that they are very serious about what has happened here. The rating agencies, we know about that during the financial crisis, but it still highlights that, hey, if even they are willing to downgrade, you know there's something serious going on. China Evergrande shares fall on persistent pressure from debt travails. It is important to understand what has happened here in China, how this has unfolded, Evergrande being at the center of it. The stock had gone down, fallen to about 2, it went up to 3, it went down, it went up, it went down. Nothing is going to be resolved at this time. So we will see this stock bouncing around. It will chop around until the investors are certain, or at least have more certainty about the direction of not just Evergrande, but the property market as a whole in China. Another default in China as property developers face some serious difficulties. The crisis intensifies, meaning the financial system is at risk. Investors, you must watch your allocation to high-risk bets more now than ever as valuations are stretched into the stratosphere. Don't forget that if you appreciate this level of detail, to hit that thumbs up. It supports the channel and ensures that these videos will come up in your feed. Alright, now take a look at this one. Energy squeeze will trigger unrest, says Blackstone. Blackstone, okay, the company that's buying up your neighborhood, is telling you that the energy squeeze is going to be a problem. Larry Fink says there's a high probability of oil hitting $100. Schwartzman and Fink call more investment in fossil fuels. Taking a look at this, we're going to end up with a real shortage of energy. And when you have a shortage, it's going to cost more, and it's probably going to cost a lot more. And when that happens, you are going to get very unhappy people all around the world, in the emerging markets in particular. Think Arab Spring. All right, inflation. We are in a new regime, and there are many structural reasons for that. Short-term policy related to environmentalism in terms of restricting supply of hydrocarbons has created energy inflation, and we are going to be living with that for some time. I think everybody should take this in and understand, what does it mean? What does it mean for you? Okay, so what? Oil's up. If you're not invested in oil, some people might say, who cares? But this means higher gasoline prices. It means everything coming through transit, that's a lot of stuff, is going to be affected by it. That means the businesses are going to pass that on to their consumers. So everything, when crude oil goes up, everything goes up. All right, there is a breaking point, but we're not at that point yet. We're not focusing on long-term solutions. We're not trying to change the world on a granular basis. We have these visions, and we could go from a brown world we can make up tomorrow, and there'd be a green world. That just isn't going to happen. Okay, so what he's trying to say is we can't do this so quickly. I believe that's what he's trying to say. Okay, the transition over to these green technologies, if it happens too rapidly, the prices will rise. Certainly that is happening today. Pricey lumber is back, boosted by supply cuts and labor shortage. You've heard it all before, but now once again, this is going up and up and up. It peaked out at about $1,700 for lumber, and then it went down to approximately $500 or so. It is currently sitting at $735. So you can see where it has been over the last little while. Yeah, it was down about $450. So it really has been a wild ride, but comparing this to the other commodities, I mean, just everything's up. Everything's up. And while you could say it's supply chain, you could point to any reason you want ultimately, but there have been many factors that have been pushing all of these up. As an investor, you could look at that and realize, hey, it's going to go up. Maybe I can, put my money here or there, but that's a decision that you have to make. We are seeing futures prices going back up, and that will undoubtedly mean the price of retail lumber builders buy goes up, of course. So if you got to do something, remember there's a delay. If you got to build a fence, a deck, or a house, maybe you might want to do that now. Mystical hold of transitory temps, huge Fed error, failure to respond quickly and fully to persistent inflation would constitute the biggest monetary policy mistake in more than 40 years. Oh, that's right, policy mistake, as if they make mistakes. But I think it's important to understand the decisions that they are making has nothing to do with protecting the individual, the dual mandate of price stability. I mean, come on. Federal Reserve price stability? Do you agree with me on that? Come on, hit that thumbs up. Let me know. They have done the exact opposite. The dollar has lost, by some calculations, 97% of its value since their introduction. You decide. Let me know. The Bank of Canada will continue pulling back its support for the economy at a policy decision this week, paving the way for the start of interest rate increases next year amid inflation worries. Inflation is more powerful than policymakers believed a few months ago. The world has changed, and I think the policy has changed. This is Canada, New Zealand. I mean, just there have been many in both developed and the developing world. And you look at their actions. We are going to increase interest rates. We want to pull back on our ridiculous quantitative easing. They're all agreeing with this, except for the Fed, it seems. It seems like the Federal Reserve is the only one that's going in the complete opposite direction. I find it very strange. My friends out there who love your coffee, check this out. Robusta coffee hits a 2017 high as buyers seek exchange stockpiles. We had problems. They're mentioning curbed exports from Vietnam. There was also I believe the crops coming out of Brazil had problems as well. You could look at that. Robusta is the cheaper of the two. You could see Arabica and Robusta, but my goodness, they are both up considerably over this period. Okay, so your coffee is about to get more expensive. Now this, I think, is huge. $1 million in mortgage forbearance, highest number since the financial crisis. But they will tell you, don't worry, because the government is there to help. Now, what they have done is basically, if you didn't pay for a year, they're not going to do a balloon payment for some people. They're not going to make you pay right away. They're going to push it to the end. And for some, that's obviously very, very good. But let's just look at it here. The current rate of delinquencies at all stages is 3.5%, and that is historically high. The last time we saw this high was a level back in 2008, 2009 during the financial crisis. But what is different is that the foreclosure rate is at a historic low because of the forbearance program. Now you've got them winding down. For many, forbearance has been a lifeline while they work to repair their household income and will resume normal mortgage payments. Will that happen? What is going to occur? That's going to be big. The foreclosures, we never want to see families undergo that process, but in the current state, where we are at a historic low in terms of choices, there are ready buyers who are ready to snatch up those homes. People get booted onto the streets, investors are going to come on in. Don't worry, Blackstone, you've got more homes coming on the market, apparently. Now, what about OPEC? OPEC are the ones who control the price of oil. This cartel is ultimately there not to ensure stability, but to ensure the price, okay? To ensure that they keep it where they want it. OPEC Plus and its forerunners have historically opted for output policies that maximize short-term revenues, except during periodic volume wars, so the preference for higher prices is not surprising. They're just basically saying, we don't want to pull back right now because we want to keep the prices high. All right, that's the end of the story. Okay, you can read the whole Reuters article for you, for your own good, but that's what's happening. Housing prices accelerating. This is just showing you where it has gone. Not that I need to show you this. Going back all the way to 2012, we have seen month after month after month after month of gains. This is unbelievable. And then you can get the list here, the 1 year price change. That red line, that's the Fed's inflation target of 2%. And yet, all of these places, Phoenix on top of the list. Look at that. What is it, 33%? Year over year, 33%. San Diego, Tampa, Dallas, Seattle, and Miami. And what about Miami? About Florida? Well, take a look. Florida grew 3 times faster than the rest of the US in terms of jobs. This is unbelievable. My friends in Florida, let me know what you see. Let me know if there are jobs. The job situation is incredible, the real estate situation, and so on, okay? This marks 17 months of private sector job growth, increasing by 5.6% over the year. This is unbelievable because other places are struggling. Florida, not so much. That's all for this video, okay? If you want to support the channel, hit the thumbs up button. Like I said, it also ensures that these videos will end up in your feed, so definitely do that. Hit the subscribe button with the little bell. Make sure that bell says always notify me. And if you haven't seen this video yet, you definitely want to check it out. Click it, and I'll see you there.